Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So we consider extended bullish pattern on the daily chart, mostly because we have important pattern on the monthly. So we have talked about it a lot already, and well, I will not repeat everything again. So the first bounce to the downside has happened precisely from the level that we have discussed recently. So whether it has happened due to the political events in the United States, maybe some other reasons, but anyway, technically the response on the resistance has happened at the point where we have expected it. So you can see, as we said, that will be important area by the actually three reasons. First is the major 1956 resistance, so an all-time high in the gold market. Second, this is important top of the Pfizer sell-off. It has put the foundation, the background for sentiment on the market for a significant period of time. And actually, I think that still lasts. And third, finally, is potential neckline. This stands in the same area where theoretically we expected the starting forming of the right arm. And, well, if this indeed stands so, as you can see, the market starts to do this. Now, we just need to see, watching, to monitor and see the progress of this forming. Because for us, it's important level somewhere around 1870. The bottom of the right arm should stand. And this corresponds to the left arm. So it should keep some harmony in the market. Well, we could give some room for the market to float around it. Maybe it will be slightly higher. Maybe it will be 1875, 1880. But anyway, this will be somewhere on average around 1875. So something this level, we should get the bottom, where we intend to consider long entry in the gold market for a medium-term perspective, for the upward extension and completion of the bullish pattern on the monthly chart. That's our major point to keep in mind. Meantime, we are watching for a downside action. With this setup that we have currently, we do not have any plans to trade gold market on the short side. But if you have the bearish view or you would like to trade it on the intraday charts, you could do this. Just be prepared, keep an eye on important levels and trying to base your trade on some clear patterns. For example, on the 4-hour time frame chart, what we have, market already has tested first support 1903. Next support stays precisely at the level that we have specified. Take a look, 1871, 1882. That's great. That precisely at the point where the bottom of the right arm should be formed, we have a confidence support. Currently, we do not have any clear extension yet and can't estimate the precise target, but approximately, well, it could be some kind of the ABCD where we should get the OP. This will be great if it will be so. So this will be agreement around the confidence, for example. This will be just perfect. Currently, we're stand with this downside action. First leg already stands in place. Minor pullback up from the first fib level. So response to the fib level has happened. Now we're watching for the next downside action. Trend has turned bearish on the 4-hour time frame chart. Everything stands great. On the hourly chart, I draw two possible ways how overall performance could happen. So direct price action suggests existence of this ABCD pattern with the OP right at the 1869, and take a look, it creates the agreement with the predefined confidence support. That's a great OP. Alternatively, as you know, guys, the gold market likes to show deep retracement. This is the habit of the gold market. Alternative scenario suggests deeper retracement to the upside in the shape of the ABCD pattern, somewhere back to the 618 resistance, 1937 approximately, and only after that starting with the downward action. So in this case, OP will be slightly higher, around 1882. So, but both OPs are suitable to us, and it's no big difference by the final result, whether this will take position at the first stage or the second, this OP or that OP, because we have no intention to trade it on the short side, and for us any OP will be good. That creates agreement around the confluence. Finally, as we said, the chance exists that market could show the direct upward breakout. In this case, we will get the different scenario, absolutely different. In this case, we will not get the hand shoulders, but we will get the direct upward breakout, and probably market could start upward action immediately back to the top. In this case, we need to catch the pullback, some pullback, some minor retracement on intraday charts to take the position. Well, if you have ability to do this, you could combine these two scenarios, because currently we do not know indeed whether this market will turn up immediately or will show complete our hand shoulders. For example, if your money management gives you a chance to do this, you could, for example, buy some minor part of the position around this support area. In this case, if market will go further to the downside, you add major part of your position later on lower standing levels. But if suddenly, by some reasons, maybe some news will be released, maybe some events will happen, market suddenly will start direct upward action immediately, you already will be possessed with this possible trade. So that is some kind of the position for all cases, but it compounds with the risk, because in this case you will have to get the drawdown against you. If you take the position market, you will keep with the hand shoulders. So that's why it's some decision that you need to make with the money management, how you will possess yourself with this trade, whether you will wait for major levels or you will split your position, applying the step in or something of that sort. So, but in general, we have the bullish view on the gold. We have predefined patterns that we're keeping an eye on. So let's see how market will play it out.